Hello and welcome everyone. Welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXPesa. So today is a very interesting day as we start another week in the Forex markets. There's quite a number of events happening this week. To begin with, we know that there is 4 central banks that are about to make their interest rate decision this week. So this includes the Bank of Japan, the Swiss National Bank, the Bank of England, as well as the Fed. So the most interesting thing this week will be the FOMC decision, as well as the press conference that is expected to cause some good volatility in USD pairs. We'll also be seeing some good volatility in US equity indices, as well as gold. So hi, Philip. I can see Masharia, Balozi, Lemuel, J. Scott. I can see Alien and Abel. Thank you guys. Thank you for joining the session and of course for your responses. So let's start right away by looking at the economic calendar, see what we're expecting for the week. So from the economic calendar, we don't have much. Today is price action traders territory. We don't expect much volatility. There's a bank holiday in Japan. This is the day they celebrate respect for the aged or for the elderly people. So in line with that, we will be expecting little to no volatility in JPY pairs. So going forward for the day, we'll be expecting the German BUBA monthly report that is expected to be affecting the euro. Housing starts for Canada, IPPPI, RMPI, and NAHB Housing Market Index. Yeah, basically indices affecting the housing market in both the US and Canada. So we expect that this will be medium to low impact news. And then there is a TIC long-term purchases in the US at 11 p.m. So generally, we don't have much happening in the economic calendar today. So going into tomorrow at 4:30 a.m., we'll be seeing the monetary policy meeting minutes from Australia. So this is expected to be quite volatile for the AUD traders. Then we get the inflation data coming from Canada. That is the CPI, median CPI, trim CPI, and the common CPI. Of course, we also be looking at the core CPI for Canada. Then on Wednesday, we look at the Chinese 1-year loan prime rate and 5-year loan prime rate at 4:15 a.m. We look at UK inflation, which is expected to have slowed down to have moved higher to 7.1% from the previous reading of 6.8%. Then towards the end of the day at 9 p.m., this is where we get the most anticipated news of the week, which will be the FOMC press conference and the federal funds rate. So generally, everyone in the markets is expecting that the Fed will hold interest rates at the current level of 5.50%. Then for the S&P, we expect a 25 basis point hike from 1.75% to 2.0%. And of course, we'll be following the S&P press conference. Then for the UK, we expect a 25 basis points hike from 5.25% to 5.50%. And of course, we'll be looking at the votes closely, the monetary policy summary. And of course, for the UK, we don't usually have press conference right after the decision. So in this case, we digest the raw news. BOE inflation letter will also be released in the same day. Then unemployment claims weekly for the US, Verified Manufacturing Index, and then the existing home sales data. And then as we proceed into Friday, we get the monetary policy statement from Japan, the Bank of Japan policy rate. This will be very important, followed by the Bank of Japan press conference. So on the UK side, we'll be getting the retail sales data. And then on the Eurozone, we'll be getting the flash manufacturing as well as our services PMI data. Then later on, we look at affecting the Canadian dollar. Towards the end of the week, we look at flash manufacturing and flash services PMI for the US. Then as we approach the weekend, we'll be having the daylight saving time shift happening in New Zealand. So the New Zealand markets will be adjusted by just 1 hour. So knowing that, and now looking at the charts, we'll be starting with quite a number of things. So last, we look at the dollar index. This one has already expired. We just search for another one. Yes. So we have the chart right here. So this is the US dollar index. So from the forward chart, we can't load much because it's a completely new chart. So from the 1 hour chart, we know that last week was a 9th consecutive week that the dollar was gaining against other currencies. So we had a big spike happening after the news last week and then moved sideways on Friday. And now today we are seeing the dollar attempting to move even higher. So this is evidence of speculation that markets are expecting that the Fed will go for another rate hike, and that is expected to strengthen the dollar further. So having seen inflation on the rise, moving from 3.2% up to 3.7%, there is a good likelihood that the Fed will go for another rate hike, and a strong dollar basically means that we should continue seeing this bearish momentum on the major pairs. So after the UK pound traded sideways for a while, there was a breakdown once, and the market kept pushing lower. So this week, I expect the same momentum to continue. So from the forward chart, you can see we are quite close to the lower trend line. So the lower trend line is the blue line here, and there's a good chance that the pound will continue losing for the day and perhaps get to this trend line at some point. So potentially moving below 1.23610. And once we get to the lower trend line, then there's a chance we'll be seeing the market bounce off from there. So as for now, we're on a downswing, moving from the upper trend line to the lower trend line, and this momentum is expected to continue. So right now we are testing the day's low, and potentially if we break, then we could see much lower prices, somewhere around 1.23610. So for USD JPY, we know that the dollar has been recovering against the yen. So after the big drop last week on Monday, we saw the market attempting to recover and eventually closing on a high, basically recovering everything it had lost on Monday. So this seems like a key price level for the USD JPY traders. So 147.816 or thereabout seems to be a very interesting level for USD JPY. So there was an attempt to break early in the morning. Market was unable to move higher, pull back downwards. And then from the last two candlesticks, it basically implies a rejection of lower prices, and the market is getting back to the same level. So in this case, a lot of traders are betting that this level will be broken. So there's a good chance we'll be seeing the market cruising above this area and getting to a higher price level. So for Euro USD, this is what we are seeing, some further downside momentum continuing here. So a big break happened last week. So if you look at the 15-minute chart and then you zoom out, then you can see the momentum that happened during the CPI announcement. So market made a recovery the following day, that was on Friday, and now we are starting a new week, not knowing whether the market is continuing further downwards or moving further upwards. So from what I can gather with this 15-minute chart is that the market is basically consolidating. So we don't have a direction yet. So it's basically a price action traders territory. You observe and wait for when there's an actual break to identify a trading opportunity. So potentially there will be a break out of this consolidation. So for USD CAD, this is what we are looking at, dollar that has been losing to the Canadian dollar, despite the dollar being so strong in the market. So close examination basically shows that there was a break towards the upper side. You can see the signs of a weakening trend. So from here, you can basically observe two things. So the first thing you observe is that as the market was going down, it made a low here on Thursday, then another low on Friday, and today we have a low. And in each of the three lows, there is a clear statement that this market is not forming lower lows. Then from this high, there was an initial break of the upper trend line, which basically represents an attempt to change the trend line. And now you can see the market bouncing off this bottom strongly, indicating that there is a good likelihood we will be seeing the market move further upwards. So there is a good chance we'll be seeing the USD CAD rally to 1.35711, having been unable to break this low for 3 consecutive times. which implies a good rally is coming for USD CAD. So one key thing to notice is that the Canadian dollar tends to be positively correlated with oil prices. So oil prices have been on the rise for quite a period now, forming new highs. So following last week's break of this area here, and the market kept going up, got to 93.416 and even moved higher. Then in this case, we also tend to see the Canadian dollar being pretty strong. So this explains why we were seeing the Canadian dollar being very strong. Major support level, the market found resistance here, support at the same level, again the support, again support, again support, and now we are seeing the market bounce off the same level. So this seems like a very interesting entry point for any Canadian dollar trader. So if you are a USD CAD trader, this might be interesting to test out. So if you are trading on a demo account, just try and execute this, go for position, set stop loss just below this low. We'll be seeing the price rally to the previous high of 1.35711. So as for gold, it was completely bearish last week, and the week after that, before making an impressive recovery backwards. So remember, when we did this analysis, we were expecting gold to make a turnaround around this area here, where there was a yellow highlight. So eventually, gold got into this space, jumped right backwards. And since then, we saw a very strong rally happening on Friday. And then today on Monday, it seems like the market was retesting the same level, but then a strong dollar seems to be the theme of the day. And we could be seeing gold facing resistance from this point and moving back downwards. So from what I can see here, it's a market that was really testing this high. So tested on Friday, was unable to break, tested today, was unable to break. So potentially we could be seeing gold trading back downwards. So in this case, if gold was to trade back downwards, then there's quite a number of levels to be tested. And one of them is the low of the day, which is basically where the market started trading today. And then this level that we saw on Friday, which is 1917, which was the major bottom for these 3 different days. So 1917 might be a nice target for any person who is looking short gold today. So as for AUD-USD, we are seeing a reversal happening here. So if the market made a break here, went up and pushed even higher, got to our target. The target was right here, 0.64615. So if you zoom out, you'll notice that this was the immediate price level before the huge break downwards. So the market made a recovery, eventually get to the target, and is now moving back downwards. So in this case, with a really strong dollar in the market, then the immediate target remains 0.64028. So the NASDAQ is basically attempting to bounce off the support level. So after the big sell-off that happened in Friday afternoon, we are seeing 50,205 being a really nice support level. So today the market is attempting to bounce from this level and move back upwards. So if I was to zoom out and show you what's really happening, you'll notice there was this high and this high and this high, forming a really nice trend line that is acting as the resistance in this market. So some further downside in this market may be expected. And of course, if it remains within this formation and decides to trade sideways, then we basically trade between this range and this range, where we use this area here as the basis of our newfound trend line. So if the market is bouncing from here and here, then we could be expecting the market to be playing between the two trend lines, as long as you don't have anything major fueling the markets. So potentially the market could be bouncing from here and moving higher, and this would remain the theme until we get the FOMC decision later in the week, which would is expected to cause some volatility in the markets. So for US30, it's the same thing. We had a big rise last week, followed by a big sell-off, and now you can see the market is finding support around the same level. So around this support area, this is what we are seeing. So we don't know yet whether the market will continue with this prevailing trend, but the overall expectation is that without any fuel in the markets, then the market may be moving sideways for a while until we have the other key determinant moving the markets. So for now, expect sideways momentum for the US30. And of course, for the S&P 500, it's the same thing. So all of them are basically bouncing off a major support level, and none of them have made a significant break. However, be on the lookout. If there's an actual break below these levels, then I expect some further downside momentum. So for US 500, for the Dow Jones, and for the NASDAQ, I expect that in any case, if there was to be a break below these levels, then I expect the market to accelerate further downwards. However, since this has not happened yet, we wait for the market to play around until we get to the FOMC decision. So UK oil or Brent oil made some good rally last week. So this week we are seeing the market retesting the same high that we had on Friday. So in what almost looks like a double top. So in this case, we are looking at an oil market that has been pretty much bullish. A lot of market participants have been enjoying the good rally. But then there's a lot of complaints that oil prices are extremely high. And now we might see measures attempting to push oil prices back downwards. So we saw that as a consistent theme last year, where the Fed will basically draw more oil from the SPR or from the Strategic Petroleum Reserve in the US. But now they have almost drained the entire SPR. So they don't have any more oil to basically manipulate the market prices. So on the supply side, we know that the OPEC, Saudi Arabia, and Russia have all been cutting oil output, whereas demand has been recovering across board. So this basically implies that there is a cut supply. So supply has been reducing over time and demand is increasing, which is pretty much bullish for oil prices. So from the 4-hour chart, this is how it looks like. And from the daily chart, this is how it looks like. So the last time we saw oil prices trading here was 11 months ago. And this was on November 14th last year. So oil continues to surprise everyone with a strong bullish momentum. So anytime we have a pullback, it's representative of a potential entry point. So in this case, now that we are seeing oil prices pushing back downwards, this should not excite you, but then it represents a potential entry opportunity once we see signs of bullish entry. So right now the bias is upwards. Don't be fooled by the double top formation. Yes, it's almost forming a double top formation here, but the fundamentals are indicating that the market prices are headed higher. So in this case, while we see the prices moving back downwards, be on the lookout for a potential entry for a buy position. So European equity indices making a U-turn. So we are seeing the French 40 index found a new top here on Friday and is now continuing further back downwards. So from the 4-hour chart, this is how it looks like. So we got to a major resistance level. Our market was unable to break higher, formed a shooting star on the 4-hour chart and is now reversing. So I expect a smooth movement further back downwards. So it's the same thing for the Euro stocks. So if you look at the 4-hour chart, our market went up strongly, found resistance, moved back downwards, and now is attempting to push further back downwards. So there is a good chance we'll be seeing this continue to be the theme for the week. So for the London FTSE 100, this is what we are seeing. Market got to a major resistance level, attempted to break, failed to break, pull back downwards, and now being the Monday, beginning of the week, we are seeing a lot of sideways momentum, so nothing much is happening here. But then potentially we could be seeing the market making a break and a run for it towards the lower side. So the price level to watch is 76.89, and if there's a break below that, then it might represent a short selling opportunity. So that's it for today. We don't have much happening. BTC making some good recovery after the big sell-off last week. So recovery continues for Bitcoin. There's a good chance we could be seeing some even higher prices. So in this case, any form of pullback will represent a potential entry opportunity. I think I've pretty much covered everything. So I'll be looking at the questions to see if there's something that I've not answered yet. How does the 1- and 5-year prime loan announcement affect the Australian dollar? So the Australian dollar is neighboring China, basically meaning that there's a positive correlation between the two economies. So if something bad is happening to China, it's also happening to Australia. If it's good, then it's also good happening to Australia. So By looking at the interest rates in China, if they are going down, it means that China is attempting to stimulate the economy, and this tends to weaken the Chinese yuan. So if it weakens the Chinese yuan, it also weakens the Australian dollar. And of course, if they are basically holding interest rate level or hiking interest rates, then in that case, it basically strengthens the Chinese yuan and also strengthens the Australian dollar. So in this case, the overall direction that everyone is looking for is whether China will continue cutting interest rates. So if they continue cutting interest rates, which is basically expected to weaken the Chinese yuan, it's also expected to weaken the Australian dollar. How will the high oil prices at the global stage influence the upcoming US elections? I don't know about that, but it's a key challenge that the US is looking to solve. So high oil prices are not desirable, especially from the inflation side of view. So inflation has been significantly high over the last 2 years, and the Fed, the US Treasury have all been working together to attempt to get inflation back in line within the 2% target. But then high oil prices are becoming a major headache for them because they don't control the supply. So in this case, even if they had been drawing from the SPR reserves, right now it's a major problem, and it's basically causing inflation to come back in the markets. And what this basically implies is that there's a high likelihood that interest rates will stay higher for longer, which is not very desirable in the markets. So we have already seen cracks beginning to happen, especially for the banks that collapsed early in the year. And if interest rates remain high and they stay that high for longer, then other parts of the economy could begin cracking. And this basically includes the commercial real estate sector, housing, that is residential housing, and so on. So it's becoming quite a problem, and we are seeing these cracks develop over time again. So as for the US elections, we know that the the administration tends to increase the spending as they approach the elections so that they can have a favorable outcome. So while the Fed is tightening on one side, we will be expecting the Congress in the US to be loosening policy. And this basically means that they will be reading a much bigger deficit or a much bigger budget in order to stimulate economic growth and make sure that asset prices remain high. But then, on the other hand, the Fed must tighten because it's an independent institution working under the mandate to make sure that prices are stable. So my view on USD, I expect the euro to continue losing to the dollar. The fact that we saw a surprise rate hike happening last week for the ECB, it also means that the market is questioning the commitment of the ECB on fighting inflation because other central banks have been hiking higher. And the fact that the ECB basically showed that might be the last rate hike they're implementing, it basically casts doubt on the commitment of the ECB. And there is a high likelihood that the Fed will go for another rate hike. It may not be this sitting on 20th, it may be the next sitting. But then we know that the US interest rates will remain higher than the European interest rates, which basically creates a carry trade that makes sure there is a flow of money from the Eurozone to the US. And as a result of that, we expect the dollar to continue gaining against the euro. Can you kindly post the Zoom lessons link here? Thanks. Hopefully, I'll pass this communication. All right, that's it. That's it for the day. Thank you, guys, and I hope to see you on the next session, which will be tomorrow at the same exact time, 11 a.m., as we look into the developments in the markets for the day, the previous day, and the key important price levels. So as we get into tomorrow, this is when we'll be having the first major news in the markets. So we'll be looking at the monetary policy meeting minutes from Australia, and of course, the final CPI. This is the inflation data from the Eurozone, and of course, the CPI for Canada, before we look at building permits and housing starts for the US. So thanks again. See you on the next one.